If you've looked at the markets on Monday, April 7th, 2025, it's been nothing short of a bloodbath. From one of the worst market openings since COVID-19 pandemic and the fear of the world's largest economy hitting a recession, it's putting the markets into a spiral. So let's break this down. Equity markets witnessed a massive sell-off on Monday. At close, the SENSEX was down 2.95% and Nifty 3.24%, wiping out investor wealth worth rupees 12 lakh crores in a matter of hours on the April 7th trading session, triggering memories of March 2020 during the peak of the pandemic. The Indian Volatility Index, or VIX, spiked over nearly 60% intraday, hitting 21.95. And this fear gauge shows how nervous investors really are. All major sectors ended in a negative territory, with Nifty Metals sinking 8% and Nifty IT sliding over 7%. All 30 constituents of the SENSEX were trading in the red. Tata Steel led the decline with a drop of over 10%, followed by Tata Motors, which fell over 9%, and Nifty Auto, Realty, Oil and Gas each fell more than 5%. And it's not just the headline indices. Small and mid caps are even deeper in the red. The BSE mid-cap index is down 4% and the small-cap index was down 4.5%, with all sectoral indices trading in the red. Other giants like Trent, Tata Steel, Shriram Finance, JSW Steel, Infosys, HCL Tech, Tech Mahindra, Reliance Industries, TCS and L&T also face sharp losses. The panic isn't limited to India. It's a sea of red across Asia too. Japan's Nikkei 225 and Tropics plunged 7%. Triggering circuit breakers and a temporary trading halt. And yes, this is all following Friday's massive Wall Street sell-off, where Dow futures fell over 1,500 points. So what's causing this global market meltdown? We can break this down into three major factors. First, tariff tensions are heating up. US announced fresh reciprocal tariffs and China hit back even harder with a 34% tariff on the US. President Trump brushed off the market's panic as temporary, but investors clearly aren't buying that. Second, recession fears on the world's largest economy. Goldman Sachs raised the probability of US recessions to 45% from 35%, and JP Morgan is even more bearish, expecting a recession this year. And third, markets across Asia mirrored Wall Street's chaos. Japan even had to halt its stock futures due to a massive drop. The sell-off has gone global. Hang Seng is down nearly 11%, Nikkei 7%, and Shanghai Composite over 6%. Experts are calling it a time for extreme volatility and deep uncertainty. Nobody knows how long this tariff war will really last, or how deep the recession might be. So stay tuned to our discussion on what should an Indian investor do to maneuver through this global market crash. Is this a great time to sell off, stay invested, or an opportunity to buy it? Stay tuned to find out more.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.